Charting disintermediates news from reality, and particularly financial news. My friends, if you sit there all day long hoping for the hot tip on Bloomberg, CNBC, whatever it might be, I would urge you instead to be paying attention to your charts, because they're going to show you what's really going on. Because reality for us is price movement and being able to accurately follow it. That is why we do our trades off the weekly chart. We're not short-term traders. We like big bucks on big charts, big moves that, again, are much more predictable, much better to be able to follow, and again, much more profitable in your practice trades. We're not a stock calling service. We're an education firm. Let's jump into these charts. We'll talk about where we went this week. For the day, everything up, really pounding up. Number 3 is 20-year bonds. Number 2 is gold, and number 1 is Bitcoin. Let's jump first into the S&P 500, up. We have a higher high this week, up 0.59% for the day. Now, again, we will be paying attention. We've talked about, as we have been sort of trying to top, but if you notice, candles getting smaller, but they are still moving up to higher highs. So we'll see how high will this market go. We were talking about the potential of topping out, maybe where things topped in July and then they ran down. Well, we're there right now. So we'll see how much further this market's going to go. With a Santa Claus rally, it can, of course, go higher, and we'll let the charts lead us. But we can see that 2-day chart, this first day, the latest 2-day candle, but good volume sitting right there on the weekly trend line. 2-day, decent volume. Actually, day and a half, we've had decent above average volume. We look at where we are this week, below average volume, higher than last week. That, of course, was a short trading week. But again, we shall watch, wait, and see. We look at the Qs, pretty much ditto there, except, of course, on this latest, we have blown through. Now, it was only up 0.29%. Latest 2-day chart is blown through the weekly trend line. The half-day, saw it was down in the morning, up some in the afternoon after a day of down movement on Thursday. So again, we'll be watching much more closely the Nasdaq 100 as starting to peter out potentially first, if indeed we're not just saving up, digesting those gains and getting ready to pop up again. But that's what we'll be looking for this week. So far, this coming week, so far what we saw in this week, again, on the Nasdaq, not as, we look at the S&P, just cleaner, nicer up movement. Nasdaq, a little bit smaller candle, pushing through the 2-day, weaker. So we will keep an eye on that. Not much there on that first day of the latest 2-day. So we will keep an eye on things and see what's going to happen with stocks. Again, still in both those trades. Let's look at where we are on 20-year bonds. Man, just a booming. We had a bit of a pullback there we saw on Thursday morning, Thursday afternoon. A lot of indecision on Friday morning, and then things just pounding up. Quite nice. Now, we look at where we were on the 2-day with all that volume with the Wednesday, Thursday. The high that was reached there on the 2-day was 93.06. 93.06, so the same as what we see as far as the 2-day with this latest move today. So the high for the week, 93.06, again up 1.56%. Just beautiful, just moving up like stair steps. So bonds going in the right direction after a nice bottom and a good turnaround point and an easy jump in. It was just beautiful and still going. We'll continue to watch how long that goes for us. What about gold? Man, this has been a great week for gold. After things popped up, then fizzled on us, then turned back around, and boom, up so nicely, up 1.73% just today with, look at all that volume. Look at this first day of the latest 2-day candle and already average volume. Look at all the volume in the morning and the afternoon on the half day. So beautiful. Gold going in the right direction. Now, where might gold stop? Well, we look around here. We're hitting where gold has topped before. So that back in April and in May. So maybe we are going to see gold sort of hold there, or is it going to just push on through? We'll watch, we'll wait, we'll see. Now, lastly, we'll look at Bitcoin. Again, nice to see 2.97%. We're still below that weekly trend line. What we're going to have to do now going into this next week is to keep a trend line there is to flatten it. We don't like flattening it. The more you flatten something, the less likely you are to get any kind of trigger to be saying, hey, things are going in the wrong direction. We will remember that we are, and we can see here as things are flattening. Again, about the same high as all the way back on the week starting November the 6th as things have slid sideways. But it is nice to see as things on Friday popped up in the morning and again continued with that in the afternoon, giving us a good day for Bitcoin. Now, we keep wondering, are things just going to, like they've done before, move up, slide sideways, and then down? Move up, slide sideways, and then down. So again, we'll be watching this next week to see if we're going to get things like spinning tops with movement on the bottom, which of course you don't see on these candles yet. You do see the telltale signs here in some of these prior moves where Bitcoin has died. So we will keep an eye out for that. Again, we're trying to find things that help us track Bitcoin. Much more difficult than ETFs and stocks. Patreon members, of course, we sent out to you, uploaded for you. You have the weekly vertical crossovers. You have the 3-wave trades. And, of course, you got early charting cryptos, commodities, and currencies, which I'm about to put out for everybody. Just that last one. The other two exclusively for you. If you have questions, problems, concerns, we love to hear from you. CW@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.